Welcome back to the Backseat Startup Podcast, where we give unsolicited advice to strangers on the internet.
Today, I am joined by Chris Joyce, the founder of Gusher. Thank you so much for being on the show. Would you mind introducing yourself to the audience?
Thanks for having me, Luke. I'm Chris Joyce. I'm CEO, founder of Gusher, and we're a startup platform. Want me to go into more for Luke? I'm happy to go into more, or just leave it at that.
Let's go into more because it's a really interesting company that we just featured last week. So if you have not already read those features, please go take a look at them.
Absolutely. Gusher itself is a platform to launch companies without the need for capital, without the need for investors. And, that really basically has to do with 99.999% of the world that isn't located in Silicon Valley, New York, or Israel, which accounts for the vast majority of venture capital dollars. So if you need a way to start a company, people join your company in exchange for performance-based equity. And their only goal is to get your company launched. We're also a performance-based equity player. We're all rowing in the same direction, and it doesn't take a penny to start a company and get going. Although people have you believe otherwise, you don't really need capital to go ahead and start a company and get it operational.
Very well said. Everyone, please make sure to go check out Gusher. It really is a fantastic platform helping startups launch. The link will be in the bio to learn more. So without further ado, we will get into the main event of the podcast.
Cool.
We will open Reddit. We'll find a question posed by a founder and we'll break it down.
Unsolicited.
Unsolicited, exactly.
Who came up with that title? Because that's awesome.
I was bouncing around ideas with Landon Campbell, who is the managing director of Chicago of Drive Capital. He is a podcaster who has the In Their 20s podcast, which is a pretty successful podcast. He's had some amazing guests on there. And we were just kind of bouncing around ideas while walking around Chicago. And it just kind of came to me. So glad it did, though. This is episode 8, I believe. And no slowing down. So we'll keep scrolling until we find a particularly worthy question. So if you see one, just let me know.
Key newsworthy.
You might have good insight into this one. So I know that you remain pretty hands-on with the companies that go through the Gusher platform, and I assume a lot of that is dealing with fielding offers from potential acquisitions.
Sure.
Yeah.
You want some insight on that, or some feedback to see if there's something there?
Sure. Let's just open it and go from there.
Sure.
So I will just give it a read. So this question is, potential acquirer / investor reached out to me. I'm not getting excited, but it's a good feeling to have some interest. How do I handle the meeting? He's from a private equity firm and they want to invest in the industry our business is in. Part of me has my guard up because I don't know this guy from a bar of soap and I'm wary about giving too much of our stats to a stranger. The timing is interesting as I reached out to an M&A firm last week to begin some initial discussions on what an exit will look like. And not less than 24 hours later, this guy from an unrelated PE firm tracks me down and wants a discussion very quickly. Is there potentially something dirty that I need to watch out for?
This is, and I'm smiling right now, but this is a great question because it's a loaded question and it actually is the right question to ask. And so many times founders, at least from my perspective, they don't know how to walk into this and handle it, okay? So the first thing that I think of is, okay, well, what type of business is this person in, all right? So if it's something like a medical device company, if it's something that's intellectual property heavy in terms of IP heavy in terms of the assets, that to me is, I don't want to say a red flag, but typically it's, hey, the warning flags are on in a certain way that, hey, there may be something there and to tread lightly. So when you start dealing with this type of scenario as, is this person real? Hey, they're coming out of the blue. The one of the things is, and this is to be a capital standpoint, if you're in the beginning stages of a company and you're raising capital, that doesn't happen too much. With private equity firms, M&A, it tends to happen more where they're really just looking for that industry vertical, possibly a roll-up, trying to determine whether or not you have something truly of value there, trying to see if you meet minimum levels, because they're more of, I don't want to say a cookie cutter type of business model with private equity and M&A, but they really are. I mean, it's really, I love the term M&A because it used to be called business brokerage ages ago, because that's all it is. They're business brokers. They're here to on the buy side or sell side of a business. But in terms of this, the potential acquirer investor, it's insanely important to go ahead and have your radar up with them. The first thing that you should do is due diligence. I mean, I'll instantly go ahead and take a look at their LinkedIn. I know that may seem kind of basic, but I can tell instantly from looking at a person's profile, almost in a way. I don't want to say that they're 100% real or 100% fake, but there's good indicators there. Are they tied to other people in the industry? Do they have connections to the same capital base that you do? Education-wise, also geographic location. People in the Midwest, I don't mean this the wrong way, but I tend to trust more and have greater experiences than somebody necessarily in New York. And also a lot of times with this type of scenario, an investor reaching out to you, and I want to address this part, if they're reaching out to you and you're, let's say, a startup, or maybe, you've got a certain round there and you're raising capital, when they reach out to you many times, it is basically trying to get information out of you because they have existing portfolio company or portfolio companies that they do tend to bleed you dry for information to see if you're competitive. Now, what worries me as a red flag here is he contacted somebody else in another M&A firm, and then within 24 hours, he got contacted, which means his deck, at least to me, the way I'm drawing my conclusions, his deck was handed off to another firm. Why? Because they have a relevant investment in the space. And so either one, yeah, they're really looking to acquire, or two, they're looking to go ahead and bleed you dry and you're a target to screw with and F with. So you have to tread lightly and in stages. You want something from them when you're giving them certain information. You want to take the relationship call and learn about them, see if you're in alignment with them philosophically, ask why they do what they do. It's important.
Yeah, absolutely. Let's touch on the stages element of it. So would the first step to be, thank you for reaching out. Happy to discuss any potential alignment. Let's get a non-disclosure agreement in place. And how much does that cure? Is that kind of a preliminary threshold to gauge if they're for real? Or
here's the thing from my experience. Okay, now because this is an M&A deal, yes, you can typically have NDAs as standard. If you're raising capital or it's an acquisition or something else for another type of company, typically startup, I would avoid the NDA on the first meeting. Also, I would have the discipline as I'm having that meeting to make damn sure that I'm not disclosing something that can go ahead and either tilt your hand or compromise you in some way. So if you're a person who doesn't think well on your feet, definitely ask for the NDA. It can't hurt. A mutually two-way NDA for you is a hell of a lot easier. But with something like a startup, you're not going to get an NDA signed. All right. So it's just something that's just not going to happen typically because of the space. But with M&A, any type of acquisition at that stage, you can get an NDA executed.
Yeah, absolutely. So in your experience, what is kind of the breakdown between when a potential acquirer reaches out organically versus when the company is actively seeking it? What are the pros and cons of both, and what tends to be the ideal situation for the company?
This is the thing. When I get contacted, because we have our portfolio companies, so we have people reaching out to us all the time. And most of the time, I'd say about 90% of it, it's really just throwing a wide net. It's casting a wide net. This scenario is a little bit different because the timing to me is a red flag or at least a yellow flag, okay? But in a standard sense, if somebody's reaching out to you, most likely it's just a net to qualify you, to see if you fit in their pipeline. And so that if a deal comes up or if a roll-up comes up with M&A, typically times with acquisitions, they're doing a roll-up in a specific vertical or industry, even an IP roll-up, which may be the ultimate reason why they're contacting you and not stating that you have to be on guard for it. So it's something that, hey, yes, I would be neutral to it. I don't hold my breath on those types of deals. It's just another day of business. It's something that happens, and it's something that may turn into something or may not. It's not some big plus. It's not some big negative on this at all.
Mm-hmm. And so the tail end of this question, how do I handle the meeting? We touched on this a little bit, but we more focused on some of these kind of preliminary discussions. So if it did lead to a meeting, how would you approach that?
This is the way I do it. I take notice of the things that people typically don't take notice and ask. So let me give you an example. So So I want the small talk. I want to find out where they're from, even though I know where they're from. I want to talk about their family. I want to talk about just a little bit. I'll drop hints here and there and see if they take bait. So I'll go ahead and say, oh, I'm married to an Irish redhead psychologist. I've got a high threshold for pain, and just see where it goes. I want to find out about them. Now, here's the thing. If I find out about them, great. If I don't find out about them, great. Here's the reason. If they offer up information, you're dealing with somebody with a higher emotional intelligence right off the bat. You know that it's not necessarily transactional, or if it is, they recognize that you have to build the relationship to do it. And so therefore, it puts the human element up front. In other words, they're not there to screw you, at least immediately, openly and quickly, okay? On the other hand, it also typically has to do with position of the person. So as you go up the food chain, many times what you end up having is that human interaction, that relationship developing is almost the entire conversation on a first conversation. Transactional mid-level guys and the guys who are really just there running numbers, they always want to go into the numbers right away. They always want to know just the model and talk about the business itself and want to know almost in a way nothing about you. So you're dealing with either a decision maker or you're dealing with basically a cog by asking, why they do what they do, by finding out about their background. Hey, bring up what your favorite food is. If you remember when we first spoke, I started talking about Chicago. I started talking about eating at this Chinese place that I like there, and started bringing up just to see how you and I interacted. The exact same thing. That's what you do at a higher level. It can save you your entire business.
I am so glad that you brought up the human element. Not only is that fantastic advice, but this middle portion of this question is, I'm not getting excited about it. I'm not getting excited, but it's a good feeling to have some interest. So especially in a situation where a company is fielding, hopefully many offers, how much of it really does just come down to kind of a gut decision and how you interact with the humans involved in the acquisition?
I don't know if it's necessarily a gut reaction or it's more of, in a way, natural chemistry, okay? So the fact of the matter is, there are just certain people in this world that you have an ease of interaction with. You literally can almost in a way complete each other's sentences. You can go ahead and you kind of have a natural back and forth. Luke, you and I do this natural back and forth thing right off the bat. We have it. Now, I realize that I'm talking a little bit longer here because there's longer answers, but usually there's a very quick back and forth with what we're talking about. Then there's other people where you literally feel like you're pulling them up a mountain or you're on the defensive. Now, that doesn't necessarily mean that that's 100% red flag, but again, it comes down to that they're either transactional or if they're high level in doing that, that's a real big red flag. If I get into a top level meeting and they're just literally asking those other questions and not taking that human element in, I'm like, have a nice day. It's a monstrous red flag for me. I need to know why a person does what they do. I need to have that background information. It allows communication to be a hell of a lot smoother and deeper.
And does that change any bit based on the different types of acquisition? So obviously that is really important if you're going to remain with the company and have any sort of relationship ongoing forward. But if you're wiping your hands of it, I presume that it still matters, but does it matter less?
Well, let's talk about the sides of it. So let's say we're dealing with a middle market company and it's a middle market company acquisition. Well, if I'm the acquirer, let's say, all right, I have to have those people on typically for anywhere from 6 months to 2 years to be able to transition that company easily. All right. If I'm buying something like Twitter, all right, I can fire half the company the next day. So it doesn't really matter. They're like two different, opposite extremes. So the vast majority of companies, they're going to be in the small to mid-sized category just because that's where the number of transactions happen. Otherwise, it's just an asset, based company it literally is its own engine. In those cases, it doesn't matter. It doesn't matter much at all in terms of the personality, but definitely the low and middle market, it 100% matters. It also matters if they're doing something, let's say, along the terms of a note. If they're doing something that is not just a cash buyout. If they're doing something that has, let's say a 2-year, 3-year, 4-year horizon. If they're doing something that has something based upon goals being achieved and milestones based upon the buy-sell agreement. There's all these nuances, and that's why the human element is required, because no matter who you are and what time it is, there's always going to be a period of rough time, of misunderstanding. And so you have to have that communication, that fundamental philosophy and alignment.
All right. So final bits of advice for this poster, just anything you have.
Sure. They have to tread lightly, take the first meeting, find out as much as possible. Don't discuss much about the business, and stay in the meeting for a good half an hour to 45 minutes on video, face-to-face, in whatever way they can. They don't just do a phone call. It's got to be face-to-face. You need to see their mannerisms. You need to see the interactions. So literally face-to-face, and ask them why they do what they do, and then listen for the answer.
Very well said. Well, consider this question thoroughly answered. You're welcome for the unsolicited advice. Chris, thank you. Chris, thank you so much for being on the show. How can listeners connect with you?
Sure. They can just reach out to me at gusher.co, gusher.co, or they can find me anywhere on LinkedIn, Instagram, Facebook. I'm pretty easily found.
Fantastic. Once again, the link for Gusher will be in the show notes. Thank you again for being on the show, and we'll talk soon.
Great. Thanks for having me.
The Backseat Startup Podcast is brought to you by Startup Founder Daily, a media company focused on early-stage companies. To learn more or apply to be featured for free, head over to startupfounderdaily.com. You can find the link in the description below.